I have been looking at rents in different markets, all the markets that I invest in. Now, I invest in Los Angeles, in Reno, in Lake Tahoe, which is very touristy community. All of these have slightly different mixes and rents. Right now, I'm seeing an increase in rents in Los Angeles. It is continuing to boom there. I think it's just because it is such a hot market, and if you invest in the right areas, it will continue to grow. Rent will continue to grow. In places like Reno, for instance, I'm seeing more and more move-in specials, half month off or X number of dollars off of your first move-in rate or a discounted deposit. So that is definitely taking place in Reno. Now, in Lake Tahoe, which is obviously a vacation market, it is slightly different. This market totally depends on tourism. Tourism has slowed down in Lake Tahoe area and a bunch of different markets that I'm following. And so this is actually returning back to a norm. Honestly, that is good. It's going to push a lot of real estate investors out who obviously did not do their numbers well enough to anticipate a slowdown in seasons. Lake Tahoe, which is obviously a vacation destination, depends heavily on tourism. There has been a shoulder season this year. There has been a slowdown on visitors. And maybe that's because we're not having record snows like we had last year. But the reality is it becomes more and more hard to have a short-term rental in one of these markets. The reality is with a little bit more vacancy and average daily rates going down slightly to accommodate for the softness in demand in Lake Tahoe, that actually drives more rentals to the long-term market. People are more interested in putting their property on for monthly or long-term, so midterm or long-term rentals at this point. That drives long-term rental prices down, which honestly is a good thing in this market because they don't make a lot of money. These kids that work at the ski resorts don't make a lot of money here, and that would be an okay thing for this area. But what does that mean? That means that generally 2 out of 3 of the markets that I'm investing in are seeing a decline in rents. Those rents are declining. Los Angeles, which is my bread and butter area, is seeing rent increases still. There is still dramatic demand for good housing in Los Angeles. My prediction in 2024 is rental income will increase by 2%. I hope you guys enjoyed this episode of the Active Real Estate Podcast. Please like, subscribe, and hit that notification button. Let me know what you guys want to hear in the next video, and I will try to accommodate that for you guys.